All right. Hello, everyone, and welcome. Thank you so much for joining us today. I'm pleased to introduce our speaker for this session, Ryan Wilday, an analyst for ElliottWaveTrader.net, who melds his deep knowledge of the cryptocurrency market with Elliott Wave theory in his cryptocurrency trading service. To our wonderful viewers, please type any questions that you may have into the live chat box. Time permitting, I will announce those questions at the end of the discussion so that Ryan may answer them. With all that said, Ryan, thank you so much for speaking today. If you need anything, I'll be right here. The floor is all yours.
Thank you. Hey guys. Hello and welcome. Well, I'm out from Seattle, so I hope everyone's having a good day. We've got some crazy weather going on out here. That's what Seattle's like. So Bitcoin's last leg, and it's a little bit of clickbait to get you kind of paying attention. Bitcoin has been in a bull, according to our terms, a bull cycle since the bottom in December 2018. And at this point in time, it's quite mature. So what I'm going to do is kind of navigate you through these last leg or legs, and I'll talk about the specifics as we go to help you make use of your Bitcoin investments or think about new ones if you haven't taken a position. Let's see. Need to get this to there we go. All right, so first of all, you guys, if you want to get a copy of the presentation, I offer QR code on the right. If you are, go ahead and pull up your cameras, you should be able to grab it. It should bring you to the Dropbox link with a PDF. And if you're old school, you can feel free to email Tom at info@elliottwavetrader.net. Tom's just the guy that answers that email. And then also, if you're interested in the service that I offer, you can get a link via the left QR code, or go to elliotttrader.net /cryptocurrency. And we do free trials, 2 weeks, no credit cards, no you will get some marketing email, but we don't call you and tell you to pony up. If it's not for you, no worries, just let it lapse. You don't have to worry about canceling a payment or anything like that. So I've been an analyst at Elliott Wave Trader since 2017. I actually joined as a member. Most of our analysts were raised up for membership, just showing some capable talent of using the Elliott Wave theory or other analysis techniques. And I've been trading crypto since 2012 myself, and with using the Elliott Wave theory itself since 2015. And again, started the service in August 2017. So we've been doing it now for about 4 years. Just a few of my calls. I don't want to go through, every single call we made, but we have a very good track record of making calls in the Bitcoin market and other cryptos. As you noticed, the last one I've been waiting for is I've been looking for $100,000 Bitcoin since late 2019. I do think we have the makings of that to happen, but it's been a bit slow coming, and we'll go through details in this presentation. Again, don't want to read through disclaimers in detail, but as you know, I am a proponent of having Bitcoin in everyone's portfolio, whether it be part of a diversified portfolio or a trading portfolio is up to you. But that doesn't mean it's right for you personally. I would do the research, I would do the consideration. Do understand that it is the most volatile asset class you can imagine, except for standardized options, which is more of a derivative asset class. So highly volatile. You've got to be used to that. You've got to embrace it, or it's going to be hard to be successful. So you have to kind of internalize that. The Elliott Wave theory, again, I don't want to belabor this, but all of my work, well, I don't want to say all of my work, but the sort of roadmap perspective I take on markets is via the Elliott Wave theory. It's a very old theory, but is extremely useful for tracking sentiment in markets, as well as basically these wave patterns that we follow have mathematical relations one to another. So we can pinpoint pivots where markets either hold or fall, pass or fail in a very objective manner. And just real quick, the markets tend to trend in 5 waves, with wave 2 and wave 4 tend to correct the trend. It also tends to be fractal. So as you can see here, I have 5 waves that make up wave 1, and then there's a larger wave 2, and that portends a larger 3 and 4 and 5 to come. And so it's very fractal in nature and kind of unrolls over history. And again, mathematical relationships of each wave one to another, which I don't get into, but all of the levels that I'm going to discuss here are developed that way. I want to share the slide that I gave in 2021 and just a couple details about it. As you notice, I was looking for us to push into the 88K and 115 region. This was October 2021. And we had held my key support for this bull market, which is now at 24K. and we looked set up to go. Unfortunately, what happened was the market took a detour. Here I'm circling the B wave top, so it almost got to that. It was, it's still about 15, well, yeah, about 18K just off, which that little move right there is 18K, which is wild. Just off by a little bit, missed, and then came down in a longer correction. So when I go, you can see here, this is about where we were at in that October 21st slide. So almost got to my target, barely missed it, came down in a larger correction. What this means is that the wave 4 that I had tracked had bottomed here in summer last year, basically is continuing on. And right now I've marked a wave 4 bottom here with the potential that it does go lower, and we'll talk about those details. But in essence, I'm saying that this area in Bitcoin is an opportunity, and we'll get down to details for a run into the 100K region. Finally, it could be as low as 88K, but ideally reaches the 100K region. And there is a potential that 100K is the last move in this bull market with another perspective, which I'll share, which we will take another correction, move on to 170K. We'll get into some of the details. Again, so just another highlight, we missed this target by about 20K in a B wave top. And going forward, I want to show this is unfortunately this bottom that we struck here in January is exceedingly sloppy and very questionable as a valid reversal. So I'm showing a bunch of alternatives, and it's just sometimes that the market has to give us a bunch of alternatives. Sometimes it's super clean and we go, okay, this is the way it's going as long as we hold XYZ level. But unfortunately, this bottom that we have in January leaves a lot of things open. One of those perspectives is that we're in a big triangle. You can see blue trend lines, which is kind of identifying a triangle. And the nomenclature for triangles in Elliott wave theory is A, B, C, D, E. And I'm showing a B wave top somewhere between 55 and 60K region before another deep pullback, but that deep pullback will ultimately hold the January bottom. And then we move on, and that E would continue us on into the black count, which is taking us up into that 88K to 100K region. And then the other alternative is this bearish wave, which could take us as low as 24K. Again, as I said earlier, I'm comfortable with this bull market as long as it's over 24K. This is very much sort of second tier alternate counts, which is really not even in play unless we break through 44K from here very directly. And there's still a chance we can hold this E wave if we break through the level, but it's like not even in play in my mind, but I've got to have it out there for risk management because again, that January bottom was exceedingly sloppy. But the primary count I'm looking for is to get what we call a wave 1 here. Again, the start of this wave 1 is extremely questionable, but if we can get 5 waves into that wave 1, then we're very likely to hold a more shallow wave 2 versus the blue E, and then launch in the wave 3. So we'll go into that details a little bit further here. So you can see this is kind of a breakdown of what we've had since that, in the sense that that January bottom. And we are progressing so far in what we call wave 3. This structure we call here is a diagonal. It's not what we look for when we talk about impulses. Impulses are very obvious reversals. They tend to have very clean levels that we can trade off of. This is none of that. It is what we call a diagonal. It is a valid way for a market to reverse, but it's a very tenuous, I would say tenuous, timid way for the market to reverse. And so we'll see if it holds. Right now, I'm looking for a third wave up into the 49K to 51K. What is nice about this is I have a very clear low, I think it was May 31st, here at the 44,500 level. And breaking that would be the first sign that this black count, this 5 waves into the 54K to 60K region that I call out there. That drop through 44,500, should it happen, would basically invalidate this entire black waves. So it's at least very objective in that sense. And then we would be looking at either the blue DE wave or a bigger drop in the red count. Okay, so we're watching this very closely. And again, until we fill out all 5 waves, after this 3, we'll get a 4, a deeper 4 than this 4, and then that 5th up to at least 54 to 55K. And then then we know that, okay, finally we can say we've got a solid reversal under this market. All right. Regardless of this mess, again, I say this is an opportunity. The way to manage this opportunity is to really scale in. If you have not bought any Bitcoin, this is a good spot. If you don't mind simply making a trade for the 100K region, this is a pretty good spot. It's just that you do want to have some cash in your portfolio if we really get that deep drop into 24K. I know for some people, these numbers are big. They sound scary. For someone like myself that's been in this market for a long time, this is not very far. A drop from 46K, 24K is not very far in Bitcoin. Again, I've ridden through, well, I don't want to say ridden through with all of my money on, but the drop from 20K to 3,000 in 2018, which, was basically an 85% drop, survived that. Fortunately, had taken a lot of profit from the 2017 run. So for me, this little move here is really not much in Bitcoin. It's just normal. It's just business as usual for me. But if you really want to participate in this market, you kind of have to learn how to stomach these moves. And really, the way you do that is you keep some cash ready. You keep some cash ready to get that fire sale when those waves do happen. Okay. But we'll see how this black count fills out. We'll see if we can avoid the blue or the red, and we just don't know yet. That's just a work in progress. In the big perspective, and this is basically my final slide before I talk about tactics a little bit and then go to questions. But in the big picture, I've been, again, looking for this yellow block to be hit, 88K to 100K. And it is potential that this is the last wave. The reason I say that is because I ideally wanted to see a run to 170K, but this wave 4, after we had that B wave top, really extended in time, and I at least have to have some perspective or some belief that this will bring an end to this bullish cycle and bring a larger than what I'm showing here, basically a larger bear market, which can pull back to 10K to 3K and take a year or more. That is very much a potential after seeing this wave 4 take about a year. And this also happens to line up, and I don't want to overcorrelate the stock market, but this does line up with our view of the stock market, which will be entering a bear market after 55K to I think 6,000. I don't want to quote Avi Gilbert too much, who leads our team. He's the SPX expert, but I think it's in that region where he expects a larger correction, larger bear market. So this does tend to line up for that. I don't want to overcorrelate the two. However, they have both behaved as kind of risk-on assets, so to speak. And so it may be that they start to align in terms of larger bear market. So again, bottom line, after rambling a bit, 88K to 100K, we have to be cautious, okay? And then we'll see if we do hold between roughly 30 to 20K. And if the case, then we may get another run into 170K. But I'm going to take substantial profit in that 88K to 100K region because I don't know until we hold support whether we're going to get that final larger run to 270K. So just last, I'll reiterate some of these tactics. Again, it's a great time to buy in, but scale now. Again, when I say scale in, take some on, leave a little cash, buy a fire sale if you get it. If not, you got to be happy with what you got. That's how you deal with the volatile market. Treat a top in the 88K to 114K region as a major top. Again, treat it that way. We'll see if that is actually the case. It is very much hard for some people when they've bought, say, for some of my subscribers having bought in the mid 30s recently and continued to buy into the 40s. It's hard for some of them after they've gotten basically an investment that's gone more than 2x, which is not a lot in crypto, but it's hard to take that off and take that profit. But we've got to observe good tactics. And then you got to decide whether you are a long-term hodler. Hodler is a term in crypto, basically means a holder, a swing trader, or both. And I'm all of these things. I've got some Bitcoin that I hold long-term. I've got Bitcoin that I hold swing trading, and I also do some micro trading or intraday trading. And so basically anything that I put in the swing trade bucket of my portfolio, that's all going to be off. And I'll have a certain small amount of Bitcoin that I'll hold as part of a diversified portfolio for the long term. But a lot of those aggressive positions that I put on for swing trading, those are all going to come off. And then you've got to decide how much you want to do with that and how much you want to bucket your portfolios. So again, sweep trade positions should be reduced or closed. At least stop should be tightened so that and I will sort of up the stop we have or support levels as we go from 24K to more tighter levels as the structure gives me clarity in the service. So if you don't know how to tighten stops, I do guide subscribers. And you got to avoid FOMO. As we're hitting 100K, you really got to say, okay, we're going to go farther. We're going to go, the market will be quite extended by then. So again, you want to take, it's okay to leave some on as a part of a long-term portfolio and see how it goes, but you got to take some profit so that you don't, again, with crypto, you can see another 85% drop in the larger bear market. Consider hedging the HODL bucket with your portfolio. We've got options and things that's more for skilled and traders and investors, but there's a lot of different ways to hedge a Bitcoin portfolio nowadays with options, and you can even short some things and whatnot. All right, so that's all I've got. If you want a free trial, there's the link, or use a QR code I gave you earlier. You can also follow me on Twitter. I try to do a post a week on Sundays. Oh, another thing I should add on Twitter, I've started a program where I open up 20 seats to our weekly webinar that we do on Saturdays. You've got to follow me and I follow you back so you can DM me, but first 20 to DM me when I open up those seats about 11 a.m. on Saturday, 11 a.m. Eastern on Saturdays. I just started that last week, so you can follow me and hang around to see if you can get a seat to the webinar, or just join as a trial and see what it's like, and you can get in for free. And again, you don't have to worry about canceling payment. And that's all I've got. So if you've got any questions, I'm here for you.
Absolutely. We do have a couple of questions. I was wondering also if you could go back to that slide with the QR codes so that while we're doing this Q&A,
Sure, yeah.
people can go ahead and take pictures of that.
Yep.
Now, I have one question from a user asking, what is your analysis on Ethereum?
It's a very similar path. But you got to be careful asking me questions when I don't have the charts in front of me, because I cover hundreds of charts. My memory sometimes can fail on a chart, but I'll give you the what's in my brain here. It's if it holds a January, it's very correlated to Bitcoin for sure. If it holds a January low, it should be moving up closer to 9 to 10K, I believe is my target, which corresponds to 88K, 100K Bitcoin. And then if it drops through the January low, it's a roughly 15K. It would be ideal where it finds support. That's again offhand, not having it in front of me. I can't give you any more details than that. I don't, since I don't have the micro charts I have, but they're not in front of me.
Fantastic. And we have another question from Dave, just asking, what other cryptocurrencies and coins do you like?
I do a weekly altcoin equity report, crypto equities as well. And I'm just trying to think what's in there right now, because again, there's several. I've covered hundreds of charts. Got Mina in there. In fact, I just did a Seeking Alpha article on Mina, Avalanche, and Solana, which I like all three. They were pulled out of their report. Rune, or known as Thorchain. Rune is the symbol. RUNE. I'm trying to think what else. There's an obscure one, Serum, which you can only get on Solana DEX, decentralized exchanges, which I really like the chart a lot. But you got to dig for it. You got to get into DeFi. I think it's also important to bring up in Vegas. I'm doing a masterclass on getting into crypto. If anybody wants to join with Money Show at the Vegas show coming up, I think it's May 8th 9th or 10th. I can't remember which day is the class. Anyway, but that's it. That I'm going to do a little bit of DeFi intro in that one. I always do at the end. Okay, yeah, that's all I can remember offhand to that question. If you want more, join the service for a trial, and you can get that weekly report.
I guess. All right. Another question from Jess is asking how you feel about the NFTs and gaming.
I am interested in the gaming world. I mean, I'm not a huge gamer, but my daughter is a big gamer, and I've had my days in gaming. I'm following Star Atlas and own some Star Atlas NFT assets. But the game hasn't really launched. They just sort of got teasers out there, and you can buy spaceships and stuff. They're expensive, kind of crazy. I'm using some of my trading profits to try to learn the game. I haven't played Axie Affinity. When it comes to NFTs, I own a few, but like I just don't have. It's not trading. Like it's not asset trading. like I do. So I have some subscribers that post on NFTs. We have one guy, his avatar is Mr. Bean. He's a funny guy. He's totally into the NFT space, and you can learn from him. But it just isn't my area. Like I have a curiosity. Again, I've taken trading profits to buy a few NFTs, but I'm not a big spender on ape JPEGs or anything like that. So I don't have too much to share, to be honest.
I'm also a little confused, but very interested in the NFT.
Yeah, it's a whole different world. Like it really is not the same as trading assets.
That's for sure.
It's pretty fascinating for sure. But I'm
All
not an
right.
expert.
Another question from Carla is asking, and I apologize if the wording is a bit funny, how long do you expect the bear market to the under 10K range to take?
It'd probably be a year or two. I mean, it's always hard to, you can't determine, and none of my work is really timing based per se. It's very much like a price discipline. So levels are highly objective to me, but timing is very soupy, so to speak, very subjective. I would guess that a year and a year or two, like 2018, you had a strong 1 year bear market. And then, in the way bear markets work, I mean, how fast you get to capitulation, if the price wants to go barreling downhill, it'll usually end the bear market faster than something that meanders. So it's hard to determine how the price action is going to be when we get there.
Okay, and from Kirkley, they're actually asking what price or percent drop are you targeting after the 80 to 100K drop?
I'm
80 to 100K top.
Again, like I can see, let's see, I'm trying to think support levels from 100,000. I'm just going off past charts. It's been a while. I think there's a support level like 3K. That would be extreme to me, but it's possible. So what is that? That's like 97% drop. Very realistic to me in crypto. Sounds scary, but to me that'll just be an awesome opportunity. but again, the opportunity for me is in context to having taken profit during this bull market. So if you're starting new to it, I know it's super daunting. That's why I'm giving you the word here. Take some profit at 100K if you're in, or 88K to 100K. It depends, but I like to at least see a clean 6 figures out of it. We'll see if the market cares what I think, but there is definitely a target there. But again, you gotta take profit, and then you're not daunted by this, 1 year bear market that takes you down 97%. You're like me, you're like, that's a fire sale. I gotta start accumulating for the next run. So you just gotta learn how to embrace that.
All right, another question we have is asking, do you have any stocks that are as good proxy that are, sorry.
Yeah, I would actually just check out the Money Show's YouTube channel. You guys I have given a equity presentation a few times, and I think offhand in that presentation I've got Marathon Mining, Galaxy Digital, I think Voyager Digital. I think those are probably my top 3, I would think, in my portfolio. I'm careful on crypto equities because you got to imagine me. I'm heavily crypto exposed. I don't just pile on correlated exposure, so to speak. So a lot of my trading is in other things in my stock portfolios. But those are 3 good ones, and I think Money Show's got them on the YouTube channel for that presentation. And a lot of things I've said have still played out because everything's kind of like Bitcoin. It's kind of stalled near support and kind of fumbling around and trying to, looking to see if that January low holds, or some of them bottomed at a slightly different time, but it's all very similar chart structure.
I'm glad that you were able to decipher my question out of that as I stumbled through the words.
No worries.
And it looks like this is the last one I have rolling in right now, unless anyone else has more questions to ask. From William is asking, what percentage of the around 18,000 cryptos do you think might eventually go bankrupt?
I think most of the altcoins will. I don't like it. People, some people have heard the term Bitcoin maximalist. I'm not quite a Bitcoin maximalist because I trade altcoins too, but I largely trade altcoins to increase my Bitcoin exposure, like taking cycle profit from altcoins to Bitcoin. There's a lot of reason why it has huge staying power. I think some altcoins like Ethereum for sure should be around a while. And in fact, its price structure is so much like Bitcoin. It would have to really diverge. Avalanche and Solana are interesting because they function like Ether in some regards, make some very serious trade-offs to increase speed and improve cost of transactions. But they have billions now locked up within the chains and decentralized finance. I have a hard time seeing something go away when that's the case, but we'll see. But I have watched in my, I mean, how many years I've been in crypto now, since 2012, 13. And believe me, I wish I had made bigger investments than I did back then. I don't want to make everyone think that I've got to be, I must be a billionaire or something. I'm not, but I've been in it a long time, and I've seen so many altcoins just disappear, get delisted, and I'm seeing some that made it through 2017, looked pretty good into 2019, and now the price action is really saying that they're decaying and probably are going to disappear. So we watch that closely. I have made very excellent calls and saying this one is dying. Everyone jump ship, and help subscribers avoid serious damage. But yeah, you cannot take it for granted. And even Ethereum, even Bitcoin, I don't take for granted. But I believe belief is different from reality sometimes. But even Bitcoin, I'm going to be watching very closely as the future kind of rolls forward. Because all this technology is very experimental. I think the technology for sure will be around. In what form and in what type of asset class, that needs to be watched closely, because I think the whole space is a big giant experiment. I think experiment that's going to be successful, but that doesn't mean every little coin is going to be successful in the future. My bottom line answer is probably 99% of them disappear and are taken over by something that's basically doing what the previous predecessors did better, basically.
All right, thank you so much, Ryan. And it does seem like that is the last question that did come through. I think you've answered them all so well.
Cool, great.
All right, then, everyone. On that note, that does conclude our time for this session. Please remember that you can scan the QR codes on the screen right now if you want access on the right to the presentation. I believe it's the right one, right?
Yep.
Yes. And on the left for a free trial of the service. Thank you all so much for joining us today. And of course, thank you, Ryan, for that fantastic discussion. Be sure to stay tuned, everyone, as we do still have a lot more in store for you today. Have a great day.
Bye, guys.